Hello, and a massive hello to everybody. Hope we're all having a great day, great weekend. This is 50 pips, rocking and a rolling 27th09/2015. So, not making any trade calls or recommendations. You and only you are responsible for the trades you may decide to take, and the fact that you're listening to this means you've read, you understand, you accept all disclosures on the blog, understanding that we're just performing some technical analysis for educational purposes only. So I'm going to break these up in two. So I'm going to do one on the futures and one on the FX pairs, just to make sure we can upload these on YouTube quicker. So what's going on this week? Well, again, keep in mind it's going to be an interesting week. Well, we've got China off on holiday on Thursday and Friday, and we do have quite a lot of speakers. You've got Dudley speaking on Monday. You've got Carney speaking on Tuesday. You've got Yellen speaking on Wednesday. You know, the week's really going to be about the non-farm payrolls at the end of the week, but we do have some interesting data points, like also the Canadian GDP. On Wednesday, we've got all the manufacturing PMIs on Thursday, okay? So where does that leave us in terms of the market? So I just wanted to do an update on here because some people wanted a little bit more detail, so I wanted to try and spend a little bit more time on this. So we're going to do crude, ES, silver, and gold, right? So in terms of silver, again, you know, no big secret for followers of the blog or these weekly updates. You know, we think the really interesting plays here in terms of swing moves is looking to try and be positioned to the long side on some of the most of the commodities, actually, really. And what we're looking at is silver trying to base right here in these lows, right? Trying to put in some kind of a base. As we've been discussing for quite a long time, basically, we've been looking at this as silver stuck in a broader range, right? And basically, the range we've been looking at is this basically 18, 16, and 14 bucks, right? So basically 14, 16, and 18. So that's the range we've been looking at. And it's been stuck here for quite some time, right? The first attempt to really break below and then base was back in November of last year, right? Around here. And basically, you know, we're being stuck here. Now, we've been consolidating and chopping around inside these 14, 15, 16s. And our outlook's been here that, you know, it's still trying to hold this, and that this has been a false break of this this big attempt lower here, and that we're slowly going to try and basically consolidate around these 15 mark to try and move back into mid-range 16 mark, right? So that's in place. So we'll have to see what happens here. We consider the 15 mark to be pivotal from a daily close perspective. So that what that means to us is, you know, daily close above or below will likely lead, you know, give us clues on direction. I still think that we could see a lot of choppy nature here. We don't like trading these intraday. We prefer position trades here, but we think that as long as we see some kind of stabilizing here, and as long as we don't get a daily close below the 14, and especially holding above here, we expect this to slowly try to rotate back into mid-range 16, and eventually to try and make its way all the way back into the 18 mark, right, which is basically the higher part of the range. Okay, so that's our outlook on silver, and that really hasn't changed for quite some time. In terms of similar action is on gold, right? Well, gold here, we're stuck in this mid-range, right? 1150s, we're talking about this basing action here, and the 1150s we're going to attract, right? So here we're still stuck inside this 12, 1150, 1100 range, right? So as long as we're stuck here, we'll likely see a lot of choppy action, right? Until we manage to break outside of this area. Now, you could easily make, as we've discussed in the past, you could easily make a case for the downside or the upside. Our view is that we're basing here, and that any closes above the 1150 will likely get some more traction to the upside, and we should see the market try and take out these highs relatively quickly. And again, we'd still expect this to move back towards the 1200. Then we'll have to see what happens on equities if we extend, but clearly for us, gold is more of a buy or hold rather than a sell here, okay? Now, what's going on crude? Crude, Now we've come all the way back down and we're trying to base here, right? Our outlook, especially here, is that we're going to be trying to move back into the higher part of the range, closer to the 55s, or even continue to correct back higher, you know, maybe even some kind of a bigger retrace of this whole leg lower, right? So we would not be surprised to see crude trading back into in the 70s, right? That doesn't mean it has to happen tomorrow, but you know, we're maybe not in line with most of the people, but you know, if you're looking at the next 30 bucks to the upside, to 30 bucks move, we expect it to be to the upside, not to the downside. So right here we're getting a lot of chop and a lot of funky action, right? And again, it takes time, right? It takes time. These things take some time to base, and you have to be patient, right? So right here we're still stuck, broadly speaking. Once we broke lower, as we had, I'll put highlight this back up, you know, around this 45, 50, 55 range, and there's just a lot of sideways chop. Now short term, right? Short term, as long as we don't get any daily close back below these lows, right? Back below these lows that have been holding for quite some time. What would we would expect is to see, you know, this being you know, all these moves right here to hold, right? All this area to hold, and as long as we get that daily hold above this broader range, we don't necessarily expect to see above these 45s. You see it's coming in just the 43 range. You know, we don't expect to see the market rally too much, sell off too much. So it's a question of being patient, right? Just need to be patient. It takes some time. You know, it's I think you can make a case for either side. You know, a lot of bearish talk across the board, but especially if we can see some kind of stabilization, some kind of stop hunt coming in terms of a squeeze, you know, this could easily move right higher. Right now, we still expect to see a lot of sellers and buyers trying to, you know, fight it out inside this range, and it's a tricky one because we could easily see a pop back into the 55s, and it doesn't necessarily mean that this is going to really explode, right? So we wouldn't be surprised to see a lot of this spend a lot of months stuck inside this range. But ultimately, again, as we said before, to summarize, you know, if you're talking about the next 20 or 30 buck move, we expect it to be to the upside, not to the downside. Okay, now ES, what's happening on the ES? So on the ES, not an awful lot has changed. We're still stuck in our 2000, 1950, 1900, right? After we had that aggressive sell-off, what we said, we expected it to stay inside this 2000, 1900 range all the way into that FOMC, and then we'd have to see how we'd settle post that FOMC. But we expected, you know, the extremes of this range to give us a lot of intraday trading opportunities. What we expected, and as we said, we expected in one of those outlooks after we sold off, we said any chance back into the 2000 is probably going to be, you know, a bit of a gift, a very nice selling opportunity, right? So if you look at it coming back, that's also lining up with a 50 back of that sell-off move. So there was a very nice action. Finally got, oops, I didn't mean to take those out. Finally got a chance to sell back into that 2000. You also got a very nice negative daily close here, and we're moving back down, right? That daily close, which took out this trend line, which, you know, a lot of people were probably looking at, and pressing back lower. So the action here, as far as we're concerned, is not super clear. We'd expect to see a lot of choppiness, but you know, you'd have to, you know, the way this is closing, the way the chart is behaving, you'd expect price to want to come back down and test these lows again, right? It almost seems, you know, too tempting for the market not to come and test those levels. Now, should those levels get taken out, we would not be surprised to see the market try and move all the way back into the 1800. But again, this is going to be a pretty tough nut to crack. But again, we think this is what is attracting right now. In terms of breakout zones, I think it's just going to be, you'll probably see a lot of action 1850, a lot of action 2050. Now, what does this mean? It just means that, the market is pricing it, trying to price in a lot of things, but fundamentally nothing really is changing. So unless we really see a significant change in terms of, something coming out of Yellen, something coming out of the FOMC, we still expect this to be trading, high volatility, choppy, but choppy to negative, downside bias. But unless we get a lot of clarity, there might not be a reason for us to see a very, very aggressive breakout in either direction. But again, all those levels are levels which we're interested to engage in, and we're not interested to engage in the middle of the range. Okay, so that's pretty much what we're looking at in terms of those futures pairs. I'm going to record another forex video now, put it up on the blog, so at least you've got two different things you can look at, and we can upload them as soon as they're finished. Okay, have an awesome one. Thanks for listening. As always, if you like the content, don't be shy about sharing it. Have an awesome one. Thanks, guys. Bye bye.